Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research for Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Nuclear Vision CEO Derek Dow. He will be joining us, and during today's webinar, he will provide an overview and outlook. Then we will take some questions. We will get to your questions, as many as we can, but you need to put them into the chat box. You can do that at any time. Now, before we kick things off, first we need to discuss the fine print. During today's Nuclear Vision webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on the company's corporate presentation, page 2. That can be found on the company's website, nuclearvisionltd.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on our own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on nuclear vision. With that, I now turn it over to Derek to update the audience on the company. Derek.
All right. Thanks, Dave. Well, welcome everybody, and thanks for having me. My name is Derek Dow. I am the CEO of Nuclear Vision. We trade on symbol NUKV under the CSE, Canadian Security Exchange. You may formerly know our ticker as GDIG, but we've just changed it to NUKV, Nuclear Vision, on the rebranding of our company since we transacted our flagship project, which is the UA92 project in Botswana, which I am excited to share with everybody here today. So I'll start by just walking through the presentation in twofold. Number one is sort of a macro, uranium story, which obviously Dave, being the uranium guru at Red Cloud knows very a lot about. And then the latter half, we'll talk about the UA92 project specifically in Botswana. So Davis went through the disclaimers, so I'll skip that. I will skip the summary and sort of do that at the end. So firstly, just on the macro part, we think that supply for uranium is a problem vis-a-vis just simply not having enough to meet the demand. I mean, there's several reasons for that. But, really you can kind of sum it up as structural underinvestments over the years, production delays, production bottlenecks, whether it's at Kazatomprom, sulfuric acid shortages, or whether it's in Canada with long, mine lead times, geopolitical instability, sort of this rift between the East and the West causing a bifurcation of the uranium market, whatever it is. And whichever forecast you look at, the one that you see here right now is from UxC, which is a uranium market consultant. But whatever sort of forecast you look at, the trend and the conclusion is the same. We just don't really have enough supply to meet the demand. And, when it comes to demand, we're talking about really, for example, that last graph we were looking at, just considering the total the global reactor fleet that's currently operational. So that's just under 440, plus the ones that are under construction. So that's, CapEx that's already been committed. And then the planned ones, those alone already draw a lot of demand, which we don't think we can supply. And a lot of those reactor fleets, whether under construction or proposed, as you can see in this chart here, are planned and proposed by China. And I think with reasonable certainty, we can assume that if China is has sunk the capex and or is proposing to construct those nuclear plants, they will do so, and because they have been doing so at a pace that's much greater than pretty much every other country in the world. And so you look at, okay, well, just demand from existing reactor fleet, not even adding on top of that all the talk we had about small modular reactors, or what people call SMRs, and of course the AI induced or AI accelerated data center electricity demand by the hyperscalers vis-a-vis sort of Google, Microsoft, Amazon, etc. One interesting stat that I think um, that I've sort of come across that in the recent times is that the average electricity consumption from AI query is 10 pounds more than your average Google search. So it basically takes 10 times more electricity to run Grok or ChatGPT query than it does a normal Google search. And of course, we may get efficiencies, but right now everyone is driving towards accuracy and speed of the information. And so that's why if we look at average sort of US electricity demand over the last 10 years, it's actually plateaued. But we do think that, or at least not us, but many forecasters believe that there will be at least a 4 to 5x increase in electricity consumption over the next few years. And you can see that in the headlines of whether it's Google Microsoft restarting 3 Mile Island, or Google funding sort of 3 new nuclear sites. You can see all of that development manifesting itself in sort of more and more demand. And so I don't know if you have any additional thoughts about this, Dave, but we basically think that demand is exceeds supply.
Yeah, thank you, Derek. So I think, demand is certainly growing. And I think supply, while growing, is certainly not keeping up with the demand side of things. There's right now about, I'd say, a 40-50 million pound gap in supply. We do think that's going to get worse. Plus, we've got that security of supply. Like you said, East versus West is going to become an issue. A lot of the Kazakh production is going to be heading into China. We are fairly, we're back in a fairly positive sentiment in the uranium space. AI is taking a lot of attention. This is like it was last fall when the uranium stocks and the uranium prices actually peaked. But I'd argue that is really just incremental demand. Certainly a lot of that sentiment disappeared earlier this year and the stocks came back to earth. But you should really look at where this demand is coming from. It's GDP growth across the world. That's really driving energy requirements. And then you've got security of supply on top of that. Small modular reactors, I don't even think that's been built into many people's supply demand models yet. And then the security side, you've got this issue about Russia halting uranium deliveries into the US, meaning the US has to go elsewhere to find product. So, the US certainly not producing much uranium at all. I think maybe they'll hit 2 to 3 million pounds this year. Probably not even that much. But meanwhile, it still needs about 45 million pounds to run its existing power plants. So we need more supply from elsewhere in the world.
Yes. Thanks, Dave. Yeah, no, we definitely agree. And we can see that also in this chart doesn't show it really well. But first of all, of course, there are two prices in the uranium market, right? There's the spot and the term. But of course, being that uranium is used for nuclear electricity, utilities are contracting these through mainly via long-term contracts, right? Those contracts every 3 to 5 years, and so most of the volumes of uranium are contracted through these term contracts. There are a smaller number of volumes, I think less than 25% annually, which are transacted through the spot market. But most of those are sort of traders, call it, sloshing pounds back and forth. And so if you look at these two, prices, spot versus term, term has sort of consistently been going up, and I think it's kind of around the $80 per pound price right now, whereas the spot, just briefly last year we overran the spot, or the term, and corrected itself right now, and now it's kind of headed back towards the term price. But I think what we should note is, okay, number one, term price is going up. The floors and ceilings that are being signed on these term contracts are also going up. That's number one. Number two is that the replacement rate for these utilities, and obviously correct me if I'm wrong, Dave, but the replacement rate for these utilities have been low, and it's not shown on these two charts, but it has been low for the last 5 years. So between now and 2030, there is a large amount, and I believe Cameco CEOs who stated about £1 billion. Whatever the exact number is, there is a large number of pounds of uncovered uranium requirements that utilities need for contracting over the next 5 years. So really, it's all this is just reinforcing that look, we need uranium and utilities need cheap uranium. So that's kind of the macro story. We'll start moving in more towards our project specifically. Our acreage is in Botswana. We have the largest 5,000 square kilometers worth of acreage, recreation acreage in Botswana. And you've chosen Botswana not only for the favorable geology, but also because it's got really quick time to start up a mine, right? From exploration and discovery to, actually getting a pound of whatever mineral it is out of the ground. Botswana has an average, 7.5 years, versus the global average of, and here in this data by S&P, it's just under 50. Probably, in my opinion, that's probably a little bit higher than that. Canada is quite high as well, and meaning it does take quite a long time. We've seen that, despite us having obviously greater grades, much higher grades in the Athabasca. Botswana is the number one jurisdiction in Africa when it comes to mining policy and sort of investor friendliness. And really, it's simple, the formula. They have a low population, and historically, the country has been supported by diamond mining revenues. And so it is relatively wealthy and therefore relatively stable economy. Now, the problem is that in the last couple of years, especially since COVID, the diamond mining revenues have fallen off because of the rise of sort of lab-grown diamonds. And so the government is desperately looking to diversify its income sources. And, President Duma Boko was actually elected. Part of his platform was he was elected to do exactly that, right? To diversify into the mining sector. And for example, one of the things that we can see is, not only is it quick for us to get permitting, exploration permits, renewals, but also once we get to sort of a CapEx stage, sort of a feed stage, the government actually has a fund which will pay 15% of your CapEx to develop a mine, right? Because they want that mining revenue. So that's Botswana. Within Botswana, as I mentioned, we have just under 5,000 square kilometers in the UA92 project, which we vended in just earlier this year. We are in the Karoo Supergroup basin, and we are just next to this discovery that has been made by a company called Lotus Resources, which is listed on the ASX, and they have about 114 million pounds. Of course, that does include inferred resources, but that is a fairly sizable deposit, which they are advancing. So our acreage has previously been drilled by Anglo American for CBM. So that we do have log data from that. And Anglo has drilled over 50 kilometers worth of holes. So there is, quite a lot of data that we have been using to understand the basin geology. And that is important because, which I'll talk about a little bit later. Our target formation is just at about 400 meters, and we're targeting, once we sort of get an discovery to use ISR to potentially recover this, because we do believe that our geology is very analogous to the Chusar-Su Basin in Kazakhstan. And of course, in uranium space, Kazakhstan is the world's largest producer of uranium, and obviously a significant company in Kazakhstan is Kazatomprom. And so most of the and the soul of the production coming from Kazatomprom is from their ISR deposits, Inkai, Kudanaskoi, et cetera, and they dominate not only production volumes, but more importantly, in the context of supply and demand, costs, because obviously cost is important. And so they have, they're all in sustaining costs, I believe, around $35, which makes it very favorable to produce despite the grades being lower than, for example, the stuff in Antofagasta. Now, as I mentioned earlier, our equipment in Botswana is in this Karoo supergroup basin, and that includes the sub-basin, which is the Central Kalahari, which we have here, the sub-basin, which we have the local Kane discovery is in Botswana. That's 114 million pounds. There's also a separate private discovery that have been made by a Russian conglomerate company in this Aranos sub-basin. That's kind of in this one here, which is to the tune of 268 million pounds. And we were saying that we think that the basin is highly analogous to the Chusar Sea Basin, and that's because, in order for us to have uranium, we need a couple of conditions. Number one is obviously a shale barrier overlaying the sandstone. And so the sandstone is for this blue package right here. What you have is essentially this oxygen-rich groundwater that moves through these permeable sandstones. There was water-soluble uranium that is carried by this oxygen-rich groundwater. Is basically runs through the sandstone. Now, what you also need is some sort of organic formation, whether it's hydrocarbons or in our case coal, which is what Anglo American was drilling for. So these hydrocarbons, or the CBN, this organic material, sort of leaks up into this sandstone here, and the uranium sort of precipitates. So that's what you have in the Chusar Sea, and we believe this is also what's happening here. Why it's important that we have the Anglo American drill hole data is because Anglo basically mapped out this entire CBN formation for us, so we know obviously where the coal formation is, which is a requirement for us to have requirement of the conditions for us to be able to have this uranium deposit in the sandstones. So in terms of our timeline, we just completed the acquisition of UA92 earlier this year, and of course we then subsequently changed the name to Nuclear Vision. And our next steps here later this year is to fly a gravity survey over the acreage, and then because we already had MEG data and the historical drill data, we'll do inversion modeling to model out where exactly we want to drill. And then our plan is to commence drilling maybe 20 some of these Anglo holes or not. That really depends on the inversion modeling, but we will start drilling Q1 2026 with the goal of updating our 43-101 report in the second half of 2020 of next year. We are a very new company, 35 million shares outstanding. So we're very tightly held by management and insiders. Management holds about 30%. Insiders another 30. So actually, between management and insiders, we own about 68%. And so the remainder is public float. Management team includes myself. My background has always been in natural resources. I'm a professional engineer by training, investment banking, at JP Morgan for a while in Hong Kong, Singapore, and our COO, Ariel Brand, is a long time sort of mining entrepreneur. He's behind 1 billion, most recently Gratomic, and has done lots of exploration work in Botswana and Namibia. And Napi is our mining engineer country manager in Botswana, and a very experienced, and he's helped us sort of navigate um, in Botswana. Not that you really need somebody because it's so easy to do in Botswana anyways, but that has been a lot of help for us. And of course, our chairs is Alan Zanson, who has been in the hedge fund and private equity space for a very long time. So with that, I think we'll keep that pretty short, just about 15, 20 minutes. And then we'll leave it open for questions.
Okay, thank you very much, Derek. Very informative presentation. We are now going to kick off the Q&A session at the portion of the webinar. Reminder to anybody online, you can type your questions into the chat box. So let's kick it off here. You know, first of all, congrats on the rebranding. Have you seen an outpouring of new interest, you know, from investors, perhaps even future customers, now that the company is rebranded to a uranium company as opposed to gold?
Yeah, for sure. Well, of course I'm going to say yes, right? But yeah, I think we are obviously with all this news right now, it couldn't be a better time for us to sort of complete this rebranding, whether it's Trump coming out with more support for the nuclear space, whether it's the hyperscalers and the increased AI demand. For us specifically, obviously, we're too early to have actual customers, like end consumers and utilities reaching out to us. But we have had a lot of investor interest because the project is like UA92 or Botswana is a very stable mining jurisdiction, and the potential for it to actually be low cost. Now, of course, I'm not going to say that we already have a discovery, but I think the chances of us having a discovery, given all the conditions, given the size of the asset that we have, given that we are close to quote unquote closeology, it does bode well for us to make a discovery here. And if we do have a pretty large discovery, actually move that fairly quickly in Botswana. So investors are very, very interested in this. Of course, we still have our gold project, Original in Quebec, which we hold, but we are looking at sort of, divestment opportunities for that one.
Okay, and you did mention it, Botswana ranks first in mining policy investor friendliness. Do you feel that fact resonates with some of your investors? I think, Europe will, easily often invest in Africa, but are you feeling the same way with North American investors?
Yeah, I think so. We but for one, U.S. and Botswana have close relations, and so when it comes to this bifurcation issue that we kind of talked about, for example, right, like Kazatomprom, it actually literally doesn't matter how much production they won't have in the future because all of that was contracted out to China and Russia anyways. So for the 45 million pounds of demand and increasing, 50 million, sorry, per year that the U.S. is increasing, domestically they produce what, 2? So where are they going to source their volumes from? Obviously, there's Canada. Australia has its own uranium mining bans in place. And so, naturally, you kind of look to Africa. And obviously, Africa is a very large place, and not all jurisdictions are stable. We've seen troubles in Niger, for example, whether it's GoviEx or even Orano sort of having troubles producing. And Europe is backtracking on, well, Europe is also a lot of countries, but in a collection of countries. But in Germany, for example, where I'm based, is backtracking on its ban of nuclear and rolling back, where and sort of looking to the France model of its electricity being largely generated by nuclear, and saying, well, actually, maybe that kind of makes a lot more sense than to be relying on Russian gas. And so, Botswana is a very favorable jurisdiction, and that's really one of the main, or one very big reason why investors are so attracted to our land package that we have there.
Mm-hmm. Okay. Now, UA92 project, you're searching for sandstone deposits in a sandstone basin, of course, much like those from Kazakhstan. Have you determined whether you'd like to target ISR production potential, like they do in Kazakhstan, or would you stick to conventional? There's little ISR in Africa right now, although it really dominates global uranium production.
Yeah, that's right. I mean, the short answer is, of course, yes. Now, Lethakane is not quite ISR. The it's a beach, so it has its sort of cost benefits. We are talking to technology provider based in the U.S. that has a technology which uses electromagnetic, basically EMS pulses to stimulate the reservoir so that we can accelerate the production um, of, of the uranium up front, which makes the each well more economic. And so, also having the management team, myself included, coming from an oil and gas background, of course, we understand how to drill injection and production wells, quite well, and so we are very partial to KOC via ISR. But obviously, at the end of the day, it depends a little bit on, um, the exact nature of the discovery.
Mhm. And I guess what are the benefits of ISR production? Cost, footprint, environmental. Why
Yeah,
this
yeah.
route?
Yeah, for sure, for sure. I mean, the short answer, right, is that um, you don't have to. First of all, from the surface perspective, uh, you basically just see, a bunch of wellheads, right? And so you don't have a bunch of surface disturbance where you are excavating a bunch of earth, um, and then having to, yeah, sort of remediate all of that out. There's no tailings. There's much less infrastructure. So just from an environmental perspective, it's just much cleaner. And then obviously, because you're not having to expend the energy to move these massive amounts of earth, then the cost is lower. So, kind of alluded to the lower and sustaining costs sort of being in that 30 to 35 range. And that is consistent with what Lethal next door is, which is, call it in the 30 to, 30, 35 all in sustaining cost range. So at current prices, we are we're profitable for sure. But yeah, of course, being ISR makes us, as you can see in this cost curve, the lowest cost deposits in the world for uranium are almost all exclusively ISR.
Mhm. Okay. And you mentioned your team sort of stems from the oil and gas industry. Do you have all the technical expertise you need right now, or do you need to go out and get some more to help explore and develop these assets?
No, we'd have everyone that we kind of need. So between myself and the finance and the oil and gas side, and Arno and the actual sort of uh, exploration side, um, and also we haven't sort of publicly disclosed this, so I'll be careful of what I say. But we are talking to um, a former executive of a very well regarded Russian. Well, they're more on the processing side actually, but they're a very well regarded Russian uranium player who have made discoveries in Africa, and a high ranking executive who is now re-domiciling his personal domicile to join us, and he will become the president. Um, and he has already been helping us a little bit as well. So between Arno, him, and Epe, of course, our geo advisor Lauren, James, we have all the technical expertise that we will need. And so now it's just a matter of completing this pond thing that we have open and doing the work.
Okay, you piqued our curiosity there a little bit. So, can
Yeah.
you tell us a little bit about the potential of the asset itself? Has this been worked before? Are there sniffs?
Yeah, so obviously with Letlhakane next door, and then the 200, that's 114 million, and the 268 on the Namibian side. So those are on the shallower end, so they're on the outcropping parts of the basin. Um, we we have the drill data from Anglo, so we've mapped out where this coal, this ECA coal group is, so we know essentially where you could have uranium, where you couldn't. Mm, um, you know, I can't say that, hey, I have 100 million plus discovery or resource deposit here, obviously, but I think uh, we do believe there is a large scale deposit here, which is obviously why we've stood there and why we're doing all of this work. But yeah, so between those and also, of course, as we know, Gobi access the Muntunga project, that's on the Zambia, north a little bit. That's also in this Karoo group. Peninsula has made discovery before here as well, in this Karoo basin, um, and so there are historical sort of quote unquote analogs that we can look to in terms of discovery.
Mm-hmm. Okay.
Yeah.
And then when you're looking for these coal groups, what you're actually doing is looking for reducing environments, a place where the chemistry changes enough to drop uranium out of solution. Is that the fact?
Right. Precisely.
Yeah. Okay.
Yeah.
Okay. Well, sounds good. So maybe just one last question about the company or the budget. What's your exploration budget for this year? How much cash do you have on hand? And do you plan to raise enough in the short term to cover all your plans for this year, maybe next?
Yeah. So we are raising around right now. We've announced the private placement. It's $2 million. And the use of proceeds you can see here is mainly bladder gravity surveying and sort of do the inversion modeling, which will cost us, call it 1.4 million if contingencies. We have about 700,000 Canadian on hand already. That will get us to queue on to sort of do more drilling.
Okay, great.
Yeah.
Well, thank you very much, Derek from Nuclear Vision. Thank you for joining us today.
Thanks, Dave. Thanks, everybody.
Okay, thank you everybody else for tuning in. Red Cloud Securities will be back Wednesday afternoon when Alina sits down with Major Drilling. So that is June 18th at 2 p.m. Eastern.